Hey everybody, this is Jim at SP500chart.com. It's 4:15 on 8/14/2013, and we're going to take a look at the chart as we typically do. Before we do so, I need to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice, and that I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. And I'm not a licensed financial professional. I'm just a guy who draws lines on charts. So let's do just that. Well, I'm telling you what, this is just a real tough thing to figure out. And I think part of it is because we've talked about in the past how technical significance seems to sort of kick around or kick in at about a 1% move. And there's a reason why these old school chart readers say in a fairly highly priced stock that you want better than 1%. So if you're trading a stock that's $100, you're going to want to see a $1 move before you say, yeah, this is worth paying attention to. If, on the other hand, you're trading a $2 stock, a 2-cent move can pretty much be ignored. So, but we're up in the area to where a 1% move, I think, is technically significant. However, we are in a part of the chart where all of the patterns that we're identifying almost aren't big enough to overcome just noise that would be in the markets. So I think that's why we keep seeing trend lines just get run over the top of. You know, we break a couple of them we see work pretty nicely, but they're usually the ones where we get that more than 1% break. I'll give you, we've seen it. I won't say I'll give you an example, but the chart is littered with them. But here lately, the chart is littered with little patterns that just seem to get walked all over pretty much at whim, at the market's whim. And a case in point was today, when it sure seemed pretty likely to me that even when we broke down out of this little triangle, which by the way was the first sign that we were going to have a rough day, and it was, but only a 0.5% rough. But when this little triangle broke down, that says this was not a continuation pattern. This instead was a little reversal. And again, you don't know what they're going to do until they do it. Interestingly enough, we did get a perfect little back test at 1694 before the market started selling back down, ultimately losing close to 9 points on the day. And interestingly, as we look at this line that we thought that, I'm not going to include you in this folly. The line that I thought we were over and would likely bounce on, we are now back under, and twice today could not get back over it. But that doesn't mean it can't get over it tomorrow. And that's the tough part about trying to get a feel for what's going on these days, is because I can't tell you, well, this line is going to be tough to overcome, because frankly, I don't think it would be. And the reason I say it wouldn't be is because it's been demonstrated the market can do that. We are very close now to this support line that I think is likely a pretty important support line, because it has been working since about the second week of July. We've been over this line. We've had 1, 2, 3, and it looks like we're doing a fourth test of this line. And if this fails, then that was from another pattern there. If that fails, then we would be looking at a move down as a minimum target into the mid 1650s. So I would be on the watch out for that, because if it goes, it could go tomorrow. We had a pretty good sized left shoulder and a pretty good sized head, but this would be almost nothing of a right shoulder. But what we've seen lately in the S&P has told us that this market, whether going up or going down, seems to be a little bit anxious at times to get the move underway. So if we do break underneath this line that is currently at roughly 1685, then I would be looking for a loss of about 30 points in the S&P as a minimum target based upon this pattern. So really that's what took place today. I think that is enough to share with you at this point, rather than trying to complicate things. If we bounce and head back up, that's great, and that is also very much a possibility. But if we break this line, and again, I would want to say by a technically significant margin. Unfortunately, breaking by a technically significant margin means we would go down, we would get about half of the move taken care of just in the technically significant breakout. So all I can say is we're just at that place in the chart. You can clearly see where there appears to be a rolling over here. And now that we're under this line, it looks to me like I'm a little predisposed to now this pattern breaking down. Had we stayed on top of this line, then I would think that would be a good sign that we would head higher. But going forward, I guess the best thing to do is let's just keep an eye on the two different support lines, and the support line right here and the resistance line right here, because it appears to me like these are going to be the ones that have a little bit more importance to them, as opposed to all the little tiny lines that we draw on a 5 and 10 minute chart. So let's watch this. If this breaks down, it looks like we formed a top that should take us down to about 1655, 1656. And if we head up and take out 1700 again, then it looks to me like a trip up to the 1720s would be a reasonable minimum target. So there's your video for August 14th, 2013. Thank you for your time. Thank you for your support.